Good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 27th. Good to be with you guys this morning. Michael, good day to you as well, sir. Eileen, Conwall, Graham, Henry, Zad, great to see everyone in the room. So about 30 seconds out, we're about to get the durable goods orders for the United States. Can be a decent market mover, but we do want to keep in mind that tomorrow you do have the more highlighted key GDP for the third quarter release, and certainly we'll go over the implications of that. But before then, about 5 seconds out here, again, looking for a clip of 0.0 for the preliminary September read. Non-goods, okay, ex-air, good business investment gauge here. See how it comes out. Weaker than expected on the headline read, right at expectations, ex-transport. Ooh, weaker than expected much on orders, non-defense, ex-air, and an at expectation print here for ship non-defense. So mixed read at best. The dollar index, as we noted last night, kind of comes into the week here having already tested resistance both on the ICE dollar index and on the Dow Jones FXCM dollar index. So we'll look at both of those this morning. Adam, good morning. So you might see some weaker dollar price action here near term. Here's what I've just been tracking on the Aussie. Came off a decent low here. Still think the Aussie could cut deeper before we start to rally again, but no change on the outlook for that front. So we'll come back to that in just a moment. Okay, so we'll go over the dollar indices. We'll touch on yesterday's setups on Euro Dollar and EURCAD. We'll also look at Euro Yen, which is testing resistance as we speak. We'll touch base on Aussie, Aussie Yen, Kiwi Yen I have, and Dollar Yen. If you guys have anything else or any other pairs or crosses, commodities, indices you want to cover, as always, feel free to drop them on the message board. We'll obviously take a look. I see in the room here, Conwell. We'll take a look at the commodity block as well. Okay. So we're not out of the woods yet for the session. At 10 o'clock, you do get pending home sales. Not likely to be a major market mover here, but heading into tomorrow's release, here's what we're looking at. So you get the annualized GDP figure. We're expecting a nice rebound from that weak second quarter read. The advanced read for third quarter is expected to come in at 2.5%. Personal consumption also expected to come in a tad softer from 4.3 down to 2.6. The major reads you want to pay attention to tomorrow morning are going to be the annualized GDP figure and the core PCE. Okay, this is the Fed's preferred gauge of inflation, personal consumption expenditure. Way more than CPI will matter, okay, as far as the markets are concerned. So we're expecting that to downtick to from 1.8 to 1.6%, a 0.2% drop in core inflation. If we take a look at previous price action, just to kind of get an idea of how weak of a read that would be, 1.6 would basically match where we were again, well, back in December at the start of the year. This is the last time we saw a clip that low. We came into the first quarter here at 2.1. We dropped to 1.8 second quarter, and now we're supposed to be dropping to 1.6 for the third quarter. Not a development that is welcomed by the Fed. The main concern has been trying to stoke inflation. So you can see with the inflationary picture back on the defensive here, really is, again, we're going to be looking for, guys, the quote-unquote Goldilocks read. Remember, the Fed's on tap next week, the interest rate decision. Market expectations heading into the interest rate decisions, looking at the Fed fund futures, are pricing in a simple 19% chance that the Fed will do something next week. So, with that said, if we get a weaker than expected print, 1.6 or higher, look for this to continue to diminish and really solidifies the move that we're expecting to see here for December hike. If it comes out stronger than expected, it could throw things off kilter a little bit. But I do expect that you'll see a 1.6, maybe a 1.7% print, which should keep expectations relatively anchored for the greenback heading into that interest rate decision next week. All right, so there's a quick highlight for the U.S. GDP figures on tap tomorrow morning. Again, that's at 8:30 Eastern. You do get the University of Michigan sentiment surveys as well. This is the final print for October, so not expected to be a major market mover. More so, it's really going to be that core PCE and headline GDP numbers. Any general times Fed speakers do not speak, times of month, when silent, etc., or is someone always on the docket? So, I mean, we have the calendar, Eileen. Here's what the central bank talk look like moving forward. I mean, you don't really have anything pertinent coming up from any of the Fed speakers. Remember, they go into a quiet or a blackout period a week before the interest rate decision, which is why all the commentary that you got earlier this week was so everyone was paying attention to it as much, right? Because now we're in the blackout period heading into the interest rate decision. Yes, there is, yeah. So Eileen, from now until the second, we're not really expecting to see any commentary come out of the Fed speakers. Good question. Okay, let's jump into the month, or let's jump into the charts. Just a month end / beginning. It's not even a month end / beginning, Eileen. It's just coming into the interest rate decision. They have a blackout period. Other than that, unfortunately, they're free to speak whenever they want. Again, I'll keep you updated with the calendar of the Fed speakers as it becomes a little bit more pertinent. Yeah, no rest for the weary, says Eileen. I mean, it's the world we live in, this perversion of markets. Every time you have a Fed speaker or some sort of central banker come out, it's just something we got to pay attention to, okay? Let's jump right into the charts. Yesterday, I just wanted to highlight, again, it's very important you guys kind of get where I'm coming from. I'm not necessarily saying that the dollar has peaked, but what I'm saying is you're seeing signs of exhaustion and momentum and price actions at resistance. So as it stands, the risk still remains on a rip, you want to fade strength, okay? In the dollar index specifically, the Dow Jones FXCM dollar index, that level of resistance is still 12,234. That 88.6 retracement that we tagged earlier in the week, nice confluence with basic slope resistance. And you're seeing momentum, again, with divergence into that fresh high that we made this week. Here's what the, here's the dollar index look like yesterday. You're seeing a little pop higher here today, but the risk still remains. I don't really expect to see too much steam in this trade, guys, until we get through GDP. And this is why the GDP print tomorrow is important. It's because of where the dollar indices are positioned. On a real strong print, this thing could rally right through 12,234. And if we get through that, there's nothing until 12,281. That would be an exact 100% off the low. Also, the high day close for the year, huge region. And then the actual stretch high for January is 12,306. Okay, more so the risk is for another spout at the highs here than a drop lower. Remember, near-term support with that slope, with a break of last week's low, really needed to suggest that you're going to see a lot more of a corrective action here in the dollar index. Right now, my focus is just on the exhaustion trade to the upside. Okay, looking at the ICE dollar index. I will fix these charts. I'm not sure why it's going to a separate page here, but looking at the ICE dollar index, very similar picture. Okay, not quite as clean with the median lines, but certainly 2016 open, 786 retracement. You could see that we did manage to close one day above that. Here's the pullback. Again, momentum showing some divergence into that high. Possible exhaustion. Look for a momentum break below 70 and a break of the weekly opening range low to get this going. Again, a topside pop here on a strong GDP print or the PCE ratio print especially, you're looking all the way up at the high day close for 2016, and then that's backed by the 2015 high day close right here at 100. So levels are pretty clear. Again, most of us, or all of us here stateside, can't trade this specific asset, but again, nice gauge, sort of an index to watch for base dollar moves. Any questions on either of the dollar indices before we start to move into some of our more tradable setups here? Long side of the dollar, looking a little vulnerable. Watch for that near-term resistance heading into GDP. So that is 1 and 2. Okay, deeper into yesterday's report, took a quick look at the euro dollar. Sort of playing out the way we envisioned it early in the week, but we're kind of stalling here near term. I just wanted to highlight the levels, a little bit of an adjustment to the levels, but the outlook remains unchanged. So we talked about this trade last week. We highlighted this key near-term support confluence at basic slope support off of that, was that the August lows, and the 2016 open, 108.72. Near-term resistance and the near-term bearish invalidation level, the level that would need to break to signal correction, still remains unchanged. We tagged it yesterday, 109.30, 109.36. Okay, so this is still the same range in view on a topside break. I do want to just highlight one level here. You might run into some problems near 109.90, basically just ahead of the 110 handle. It's been a decent pivot in price if you look to the left there with some highs that we made back in January. So watch that as a soft target, but you're really risking a rally all the way up near 110, 110.45 again. That being said, here's what it looks like on the near term. Before we get all excited on trying to fade the weakness, this is what I'm looking at. And here's where we were yesterday. So this is still the key near-term resistance we need to get through. And this is the median line, again, that would prompt more corrective action to the upside here in euro dollar. The divergence signals has been pretty decent. You're not really getting too many triggers as far as momentum. So it's been kind of hard to call. No levels have changed though. You stay constructive while above the weekly open. You'd need to get a break below the weekly opening range low here, which is a host of near-term median line confluences right around this region to really validate a continuation lower in euro. So just wanted to kind of update you on where we are with that on euro dollar here heading into GDP tomorrow. Remember, the ECB does not untap till December, so you don't really have much in the way of policy risk from that zone. Next week is, like I said yesterday, huge central bank week. You have the BOJ, RBA, BOE, Fed. We have non-farm payrolls on Friday of next week, so big week for event risk, and the first week of November trade. So just a word of caution there as well heading into the end of the week. Stay light on the positioning. I'm sure GDP is going to prompt some volatility, which we could probably play. But heading into the end of the week, into the close over the weekend, and the election, Eileen, I keep forgetting that, to note that. Absolutely. Just use some caution, okay? It'd be a time for me where I'm reducing my leverage, not upping it. Although you're likely to see volatility start to move up, you're going to want to jump into that a little bit more, a little bit more leverage, but it's not really the best time or the best trading conditions to do that. All right. So if there are other questions here on the euro, we'll move on. Watch for resistance break above 109.36 to get this going. Key support near term and near term bullish invalidation. We'll keep it at that 108.72 2016 open. Next up on tap from yesterday was EURCAD. Don't really have anything to add here from yesterday. You're kind of still fizzling higher, which is welcomed, but you're not really getting much back and fill, not much opportunity to get back in. So if you're holding long positions on EURCAD, I'd have my stop above at 145.36, and you're basically still looking for that possible stretch into 146.72. So we'll see if this thing can finally make that push higher. Here's what it looked like yesterday. This is on the 60-minute. Let me bring this into the hourly here. So what was encouraging was that you saw that break of the upper median line parallel, come back, check the support, and move off. That's like textbook technical analysis, right? But here you are with momentum also starting to fizzle out. In fact, if you bring this into a line chart here, that's a higher high, and that's obviously a lower high. So you're seeing some signs of exhaustion on all of these stretches that we've made so far this week. Is it a time to get short? If you are going to take a counter trend trade on this, I would be super nimble, like I said. If we break the age of lows, sure, you're probably in for a downside run here towards the lower parallel, channel support, confluence support, and I'll continue to stay constructive while above this region. Looking for that stretch into 146.72. Hey, look at that. Interesting. Here's what EURCAD, by the way, looks like at the daily chart. Bear with me one sec, guys. Ronnie, are you in the room? I'm not sure if he made it in today. I got an email from Ronnie asking about this. So what I wanted to highlight was, I think it was EURUSD, which we'll go over as well. But what I wanted to highlight was a lot of these crosses, guys, came off of major support. Let me take a step back. I don't want no one here should be too surprised about the upside approach that we're seeing on EURCAD, Euro Dollar, even the rebound EURUSD. These are all setups, guys, that we've been following here. 143.80, we talked about that last week. Basic trendline support off the December lows, tagged 4 separate instances, again held on a closed basis. And I'm not sure what's going on with my momentum indicator here. But in any event, it was a clear-cut rebound off of support, and certainly the price action that you saw on this specific day, this is when we first highlighted this EURCAD possible reversal, really was the onset of a much more prominent or profound rebound. Here's what it looks like, again, on that near-term chart on the 2-hour. I'm not sure, guys, what's going on with Trading View and their momentum signature. Sorry about that. Bear with me one moment, guys. Just going to refresh this. That's how you know you've done too much analysis on the charts. Okay, we're back. So here are the oscillators. So what I wanted to say is on the 2-hour chart, I was looking at this earlier this morning, you're getting a lot more profound divergence. These subtle divergence shifts are usually pretty indicative of exhaustion trades. So near term, yeah, okay, look for the pullback, but I'd be looking for that to find some support near that structural uptrend. Any questions on EURCAD? That's number 4. And keep in mind that on Tuesday, we do get the GDP numbers from Canada. So for the loonie, that's going to be early event risk next week. Those are month-on-month figures, not going to be really that crucial, but something to keep in mind because there's really nothing on tap for Canada really until we get deeper into the month. All right, next up on tap is Euro-Yen. That was from the previous session. I think this is what Ronnie was talking about. So let's go over that real quick. Euro-Yen. Here we go. So for Euro-Yen, as I mentioned earlier in the session, we're basically coming into some really near-term resistance as we speak. Here's what Euro-Yen looked like back on the 25th. We were coming off of structural resistance. The focus remained higher while above 113. So you're basically looking for a hold and a rebound to get through into 114. 114.45 is the 50% retracement of the decline off those highs. So here's what it looks like now, first on the daily chart. And again, if we go back to the previous update here, just to show you where the daily chart has come from, there's that key support. We talked about this yesterday, so I don't want to spend too much time on it. But the rebound heading to the upside, it's that 100-day moving average in blue and basic trendline resistance from the yearly high right here. So near-term resistance. On the near-term price action, you even have structural resistance as well. There's that 50% retracement, and again, that trendline resistance. So you're testing that right now, momentum making divergence by holding below 70 as price action makes another high. Possibility for a near-term exhaustion high here on a pullback. You stay constructive above today's low, okay, which comes in right at trendline support. So we're going to move our bullish invalidation level. Well, I guess this was our former target. We'll leave that right here as now support. And this is sort of the range that you want to play. You're looking for a topside break here to really validate a much more profound reversal in euro yen. Okay, this is kind of key near-term resistance. I do want to note that that 100-day moving average stretches all the way up into 114.60. So watch this range into 60 here before we get all excited on some sort of more prominent breakout. But long story short, you don't want to look for long exposure from here. You want to look for a pullback on this exhaustion play to try to take another stab at the highs. TradingView should be thanking you for pushing their boundaries. Who else would? They know where to program. They know where to reprogram now. Yeah, right. They actually do ask for feedback. When TradingView actually first went online, they reached out to the Daily FX crowd and they gave us all the pro accounts. So it's a pretty great trading platform. I really can't complain. You get glitches like that sometimes, but certainly having cloud-based saving your setup has changed my life. Instead of having to carry a saved file of every chart, you know, it's all saved in the cloud. Any way to display ATR in TradingView? Not in the way I have it on MarketScope. So if you'll notice when I'm trading live, I always just have the quarter of the daily ATR here in pips. Don't really want to look at the oscillator. You can't get it like this. No one's written code for that yet. It's open source, so you can actually, you know, if someone knows how to code, we could write the code for it. But they do have regular ATR. Nothing fancy there. And you can get like a little gauge there of just normal ATR, but not in the way that we would want to kind of pay attention to. Questions on euro yen. Now, interestingly enough, dollar yen is at resistance as well, so I wouldn't be too surprised to see some yen strength, give a pullback to some of the yen crosses, and give us some opportunity to get back on there. But as it stands, now checking resistance on euro yen. That was number 5. Okay, let's get into a little bit more of the juicy crosses. Aussie dollar is making a move here. I'm kind of struggling getting in. I kind of got out of this trade, you know, way too early. I did take a little stab at a short position yesterday once we started to kind of collapse deeper into the U.S. session. But I got out of that pretty quick as we got into the monthly open and just below that 50% retracement. So from here, look, nothing's changed from the level standpoint, but what has changed or what's making me concerned is still the lack of constructive momentum here. So let me take a step back. Here's the daily chart. Here's what it looked like back on the 25th. Okay, and this is the 240-minute, which I'll show you in a moment. And the one thing I wanted to highlight, and what I tweeted on SB Squawk, and I think MB Forex as well, as it was happening, was the high day close for August. It's a very inconspicuous level. I know we've crossed it multiple times over the last 3 months, but look at what price action has said there. I mean, just in the month of August alone, you had 6 separate attempts at a break above that region. Obviously, that's where the high day close came in, but failure to close anywhere above that high day close subsequent to the high that was made on the 11th. We tried again last month, failed to close above. We tried again late in the month, failed to close above. This month, we actually did close 1 day above. But what happened subsequent? Huge outside day reversal. What happened when we tried to make the approach in late September? Huge outside day reversal. What happened early September? It wasn't an outside day, it wasn't a reversal, but it was a massive outside day. And these big range reversal days or big range outside days off of resistance are very telling. So on this approach here, as we were making the approach early in the week, I said, look, this is great. We're at resistance. This is 77. This is a target. But if we don't close above it, you know, you're just as at risk over the last 3 months to see the same type of price action materialize, and that's what we're seeing. So does that mean we give up on the long side? Look, here's what it looks like on the near term. I'm flat, by the way, on Aussie, but here's what I'm looking at. As long as we stay above the weekly open, I'll extend that range down into 75.93, what caught the lows earlier, basic 618 retracement. It actually coincides on nice slope now. So this is near-term support. And for me, I'll treat this as the bullish invalidation level. If we get back below this, you're likely to see that drop towards 77.54. More importantly, down here is the broader, key support structure, that broad formation that we've been following in Aussie, which has continued to be so fruitful. So you're risking a much more substantiated drop, if we finally make it below the lows for the week, that 618 near-term retracement slope support. So Mike, what does all that mean? Steven says, what does outside day reversal mean? So an outside day reversal, Steve, is when the market makes an outside day. So what an outside day entails is it's taken out the previous session's highs and the previous session's low. So you look at the next candle here, that range encompasses the entire previous session's price action. And it's a reversal day, meaning you were rallying the previous day and now you close lower on the session. So an outside day reversal isn't always something that's magical or important or telling, but when they happen at key resistance or key support, that's when it's something that becomes a little bit more technically significant. He says, so an engulfing candle. Yeah, that's another way of putting it, an engulfing candle. Although an engulfing candle doesn't need to be a reversal. The fact that it's an outside day reversal candle off resistance is really what's the tell. It means the market tested that key resistance, it failed, then took out the previous day's lows. It's a full round trip. Steve, does that make sense? Okay, got it. Thank you. You're more than welcome. Conwell says, sir, what number for crude? We got you. Don't worry. We'll jump into crude and silver. Any questions here on Aussie before we move off? So the long and short of it is I'm still looking for a possible pullback towards the weekly open, this support structure. I'll be looking for long triggers and momentum. If it breaks, I'm not going to chase the downside. I'd be looking for a rebound back to that median line before trying to short this thing. As it stands right now, no change to any of our levels. Questions on Aussie? Going once, going twice. Next up on tap is Aussie Yen. We also covered that on the 25th. Here's what Aussie Yen looked like earlier. It's turning just pips. In fact, that high that we talked about here in the webinar did, in fact, end up being the high. Turned just pips of that confluence key resistance zone into 80.36. Again, I'll bring your attention to that 618 extension from the advance off the lows of July. You have the 200-day moving average, which is capping the advance as well. We talked about this yesterday, how this has been a very nice resistance sort of barrier for price action over the last 12 months. And certainly you're looking for some exhaustion possibly here on the near term in Aussie Yen. Do you think you can make another stab into this little corner here? So I'm going to put key resistance just higher, extended just higher. On a closed basis, though, you'd want to see us hold below 80.37, 80.36. Not going to take a stab at the shorts yet. Still looking for signs of exhaustion. You got some really nice divergence that we talked about here yesterday into those highs. You got the pullback. At this point, by the way, just bear with me one sec. We don't want to get too granular, but I'll leave that 50% on there for now. Little bisector. So look for some exhaustion basically heading to the US Open. If this thing probes back into that trend line and finally make a tag of it, I'd be looking to fade some Aussie strength here near term. I think a good one because of what we're talking about with the yen crosses and the possibility of near-term yen strength to give us a little bit of a reprieve from some of the weakness that we've been seeing in the yen crosses, i.e., the yen crosses moving higher or the yen weakness. So if the yen starts to give us a little bit of a pullback and starts to rally a little bit, you see this thing, finally start to break down a little bit more. We'd be looking for re-entry rather, excuse me. Initially at the weekly open would be a first area I'd start to look right here. Remember the dots on the weekly charts or on the intraday charts represent the weekly opens. That lines up with that sliding parallel there. It would be a first area of interest. I'd start to look back on the long side. If you look to the left there, really nice area of former resistance and inflection. If we breach 2014 trendline resistance is what you're looking at. And that takes you back somewhere in the range of 81.50 now. There's that basic trendline resistance off the 2014 high. Okay, and that is Aussie yen. Going once, going twice. Looking for some exhaustion high here to possibly look for a pullback. Next up on tap and last review, last two ones, Kiwi yen and dollar yen, and then we'll jump into your questions, guys. Kiwi yen looks like this. 5, this was 6, 7, this is number 8. There's really nothing to update on this except just a quick look at where price action is. It's still continuing to fizzle near that 74, 78 target. Here's what Kiwi yen looked like earlier in the week. Okay, this is the level of which we're trying to see some more pullback. You can see that price action struggling here for like 3 days now. Nothing to do here until you wait for a resolution of this, but I still think you fade weakness well below 75. There's really nothing that's changed here except a little bit more chop sideways. You are getting some divergence into those highs. Price action was making higher highs. So it looks like it's ready to turn over. Not really getting much play so far. I think you're seeing some yen weakness and Kiwi weakness kind of give this thing some back and forth. The risk still remains for a little bit of a cut lower with a break below this median line. All right. Just a quick update there on Kiwi yen. Nothing for me just yet. Last but not least, dollar yen. That's number 9. He is what our friend dollar yen looks like. Very similar scenario in that same 104.86 target that we talked about yesterday still continues to cap the advance so far. It's the 100% extension off the low. Here's the daily chart. Really the most important thing. This is kind of just what you want to look at right now. Focus remains higher in dollar yen while above the weekly opening range low. Key major support isn't down to way down here. So if you're holding long, stay on to them. If you're looking for re-entry on the long side, don't even consider it at this point. I would be looking for at least a pullback to 104.44 to even think about starting to look approaching the long side again. But you need to see that break above 104.86. If this gives out, again, nothing is on tap until 105.50, 105.80. So have a really nice 100 pip range to the upside here if we finally clear that 104 barrier. Here's what the near-term chart looks like. Pretty clean. So at resistance right now, look to at least for some pullbacks here to possibly get back on the long side, a breach above 104.86. You're looking for that rally towards that 105.55, 105.80 level. Okay, let us jump into your questions here. So I saw a couple come through the wires. I'm going to take them in the order that they came in. Conwall, crude, and silver. And gold, okay? I put out updated radar charts, guys. These get updated a couple times a month with some longer-term views of some trades that we follow here in the webinars, as well as some trades that you guys ask about. So a quick update here. This is the weekly chart for gold, and I thought I'd give us some references. We've been following this same weekly chart for a couple quarters now. So let me open that real quick. And here's the weekly view of gold. So as we've been following on the daily chart, and I'll bring that in view too so we can just have them side by side. As we've been following the daily chart, we broke below that 1303 level early in the month. That really prompted a massive decline. We talked about 1250 being support. And if you look at this trade from this standpoint, it's still testing the lower bounds of this formation that we broke as resistance. This is what I was trying to highlight yesterday. The 100-day moving average also sort of capping the advance so far. Really a contractionary range. So if you look at this actually in near-term price action as well, we're basically checking resistance right now. I know this is a messy formation, but even if you take a sliding parallel off that high, still gives us a little room, okay, before we start to panic about a breakout or anything. But long story short, levels haven't changed on gold at all. We're still right in that same key range. Risk remains for a deeper cut to the downside. Again, that weekly chart really highlights the need, in my humble opinion, for gold to be dropping into this region before you finally start to surmount a more sizable rebound. So that extends the 100% extension into 1235. The 52-week moving average comes in just lower at 1231. Critical key support and bullish invalidation for the broader uptrend is all the way down here. Again, but coming into this region, I'd be looking for much more stronger, more significant support here in gold. All right, so quick update on what the major longer-term levels are here for gold and the implications for a deeper cut to the downside before you start to rally. Moving right along through those radar charts, Conwall, here's what silver looked like last night. Levels here remain unchanged as well. It's really uncanny how this is, specifically silver, I think, even playing even cleaner. If you went to the previous radar charts, guys, you can always click on radar chart archive. And the one that we highlighted back on the 9th, early in the month, look where we were. This thing has just been absolute ping pong between 1785, 1740, has continued to really govern price action for what, almost 3 weeks now? And this is the range to pay attention to, Conwall, plain and simple. Now, more so than it was back here in early October, even more so now, 1740 becomes a critical area of support because you have the 200-day moving average also sneaking right up into there. So you have former channel support, longer-term trendline support from the yearly lows, and the 200-day moving average converging on that fib 1740. Okay, this is a 100% extension from the decline off the highs and a 50% retracement from an ascent off the lows. So levels are super clear. Okay, look for a break of this range. Until it breaks, feel free to scalp this as such. It is a range. Okay, and even on the near-term chart here for silver, I know we've been following this, Conwall, just to bring it up to you again. Some of our levels moved here a little bit. But you can see, real clean. As long as you're above support, you don't want to take too much of an anchored short sort of bias. You really need to get below 1740 to get the next, I think, dump. I think if that breaks through, you're going to dump much, much lower. Till then, respect the range. Conwall. All right, you talking about crude? So here's what crude looks like. Any questions on silver before I move off? Again, feel free to take a screenshot of this. Again, it is available on the latest radar chart. So right there. Last but not least, I did want to give a quick update on crude. I put out a piece on Daily FX yesterday, by the way, highlighting this piece. I think it's actually a pretty good setup. Here's the link for that report I put on Daily FX yesterday, guys. I put it right in the message box here. Conwall says he's having problems with the sound. Guys, can I just confirmation that the sound is still working? No problem, Henry says. Sound is good, Eileen. Okay, thanks, guys. But looking at crude, here's what crude looks like to open up the session here. We're at support. I know Jamie put out a piece on this, or put out a tweet on this on SB Squawk earlier. Here's what we looked like yesterday, and what we said was, look, you know, let me move to the commentary. So you're at support basically at 48.77 into 48.90, and we could see a rebound or some recovery, but the focus remains lower while below the reversal day close at 50.60. So Stephen, we were talking about outside day reversals, right, at resistance. Reversal days in and of themselves can be significant too when price is coming off resistance. So the reversal day close brings 50.60 into view as resistance. Key support here, near term, the highs from August, the 618 extension from the advance off the lows, a basic 236 of the entire advance, slope support or basic trendline support, and slope support here, all converging on this region. So sure, look for a near-term rebound. Doesn't mean we're out of the woods yet. We had some pretty strong divergence into the monthly highs. You failed at the yearly high, okay? So I'd still be looking for a possible drop lower, looking to sell rally sub 50.60, looking for that drop into the monthly open, 47.30, and on a deeper cut, structural support comes in at 46.20. If we get into this region and you're short, I'd probably look to take most of it off the table, bring your stops to break even or better to see if you can get the stab lower. But that being said, you're at near-term support right now. So Conwell saying, I'm long from 48.90. Okay, nice play so far. I think from you mean from yesterday, right? With a stop at 48.93, today's low, target is 49.94. Let's look at the near-term chart. Yeah, I like those targets. I'd be looking for a couple of things. First of all, one thing I want to say, nice entry. Second thing I want to say, I like playing the bounce here. That's kind of how I would play this. Third thing I want to say is you want to be nimble because it is a counter trend trade, right? Obviously, off the highs here for the last 3 or 4 or 5 trading sessions, you've been moving lower. So just note that, keep that in mind. 40.90 or 49.90 looks good. I would just be using some caution in the range into like 40.70, 40.60. You have the median line here for the formation that caught the lows and caught that high. So the slope is on. Obviously, the median line's been kind of messy here for the last couple of days, but you have that, and then you have a series of lows here in a pivot right into like 49.80 or 49.80. Yeah, sounds about right. All right, so use some caution around those levels. I do like the advance at least stretching into that 49.65, 49.70 level at least near term, yeah. All right, sorry about that, guys. Conwell, does that help? Does that make sense? It's a 2-hour. Let me check this on a 30-minute here. Momentum looks pretty good. A nice hold at 40 at 50 there as support. Okay, sir, we'll follow your instruction. Conwell, that's just my humble opinion, my man. You've been doing really well in these commodities, so just keep it up. Nice entry. I would just say watch that initial median line. If that clears, by the way, just to put things in perspective, Conwell, again, my humble opinion, man, if that clears, you're probably likely going to see this thing rally right into 50 again. Because you got that 50, which caught the highs, and then the upslope here, longer dated upslope, actually converges up there as well. So it could be sort of just another run up right through that if we do clear that median line. Always helps me a lot. Hey, you're more than welcome, man. Glad to hear it. Okay, so that is crude and the final of the radar charts from last night. Any questions on anything we've covered so far? Steven says, can you look at a 5-minute and a 1-minute chart of Euro Yen and let me know if you're seeing any divergence or exhaustion? Sure can, buddy. Let's take a look. I think you answered, I don't need to answer that question now, right? It's breaking higher. Let me see Euro Yen here. All right, so we might not get that pullback, guys. I wouldn't chase this or try taking a fresh long on this breakout at this point. If it stretches into a high here and fizzles out into the U.S. Open 930, you get a little bit of a pullback. Really don't have anything until 114.87. So if it settles near 114.45 again, might be a decent stab at a long against the opening range high for the U.S., which is down here at 114.30. But you know, you're buying at the weekly high is never going to be something I'm going to really feel comfortable doing. Sir, do you go through silver? Actually, I lost the connection. Yeah, Conwall, I did. For the sake of time, I'm just going to have this archived for you as soon as possible, man. Just to give you a quick update, there's nothing really new on silver, okay? Just, again, don't want to interrupt everyone here in the room for too long, but here's the silver chart. The silver chart. Okay, no change to any of those levels. You're still looking for a resolution of this near-term range. 1740 becomes critical support still. No change on that front. Steven says, glad I asked. Yeah, Steve, I'm not going to lie to you. I was tempted to do the same. Look for that euro yen short coming into the U.S. session, especially as we stretched into that confluence resistance region. But remember, as I said a couple of minutes ago, that 100-day moving average stretches into 1460. So I'm still hesitant to do anything or make any reasonable or more stringent assumptions at this point. Still could be an exhaustion. Okay, if we make it back below 1445, specifically on an opening range stretch higher in the U.S., still might be a decent fade. Still might be a decent fade. That being said, ultimately a pullback we're looking to buy. Okay, it is coming off of a major support level. All right. Wes says, pound, please. Coming right up. Can we look at pound? Yes, you can, sir. Not my cup of tea, but here's what you saw this morning with UK GDP numbers, okay? Coming in weaker than expected on both fronts. GDP quarter on quarter coming at stronger than expected on both fronts. You saw the GDP quarter on quarter coming at 0.5, topping a 0.3 survey. Same thing with the year on year. So the data did see a little bit of a pop. Not much for me here. I haven't really been following this. The only thing I was looking at was this earlier today. Kind of rallied right into that same median line I was looking at yesterday. I was just slapping this together for one of our interns who is really, he's really hell-bent on trading the pound. And I said, look, man, just take a look at this, I guess, if you feel really compelled to do so. And actually, the slope ends up catching the highs pretty nice here. So what this is, by the way, is former channel support. Let me zoom this out, bring this to a 4-hour. Again, I'm not really messing with this, but just for your consideration, again, this basic former slope support, really nice channel that we were in for a couple of weeks. When we saw the downside break, that was the sharpest part of the move. And you can see that that former slope support, make that a little darker here. Oops. Now resistance. If you go back even further, the broader encompassing slope, this one that we were working with, okay, on the breakdown, the pivot below the median line, break, we failed miserably here at the lower parallel, that's now resistance. So you kind of have a three-way confluence here alongside the median line currently coming off the lows. So I mean, if this speaks to you and you feel, Wes, compelled to trade it, I guess this is sort of the pattern I'd be looking for. That would leave you to basically stay constructive above this week's low, with really needing a key break above this region. Irrespective, Wes, in my mind, sterling has just carved out a pretty impressive weekly opening range. So here's the weekly open. You test the lows from earlier in the month here in October. You came back, you tested the weekly high, and you're kind of sitting in that range. If this slope is accurate, this is really sort of the max range you need to break out to start playing the long side. As far as lateral levels of importance, it's tough. It's tough trying to squeeze levels out of something so stretched, guys, which is why, for me, you haven't seen too many sterling crosses be highlighted on the intraday positioning reports for too long. It's just I need more price action. Hey, a basic 236 comes up in there too. Cool. Let me clean this up. Oops. What level did you say the dollar yen needed to break through? 104.87. I'm long since 104.25, says Steven. What's the target for a breakup? Okay, let me go through these questions one by one. Wes, so what was that for the breakup? If it breaks the upside, I'd be looking for a rally back towards like 124.50. As an initial target. Again, guys, this is just looking forward. I am not trading this, okay? But just for your consideration here, Steve, or Wes, these are the targets I'd be looking at. So you have a pivot there where kind of the breakdown found instant resistance. Just ahead of that comes in 124.50. So I'd be comfortable with that. A basic 38.2 takes you into 125.18. And the consolidation range break target would be 125.60 up here. So this is a measured move, guys. Basically, for these ranges, when they sit there for so long, typically a measured move of the measured distance of that range is a nice target on a breakout play. And if we do max the highs from earlier here last week, you'd basically be looking for a breakout target. It's like 125.60. It's the pound. Okay, data has actually been pretty good. Inflation was pretty good. The GDP numbers were pretty good. So we might be ready for a little bit of an alleviation here, but those levels I'd be looking at. Wes, makes sense? He says, okay, thanks, Aaron, more than welcome. Steven says, what level did you say for the dollar yen? Dollar yen. 104.86, yeah. That's resistance, okay? That's the 100% extension where we capped out the weekly high. So in and of itself, Stephen, objectively, it's an opening range break. So if it clears this, it's Thursday, you made a Tuesday high, sort of would be looking for that end of week rally. I am long since 104.25. Nice trade with a stop at 103.70. Okay, let me tell you, Steven, this is what I'm going to say. I don't really know what you're trying to do with that position. From a scalping standpoint, I hate that word, but from an intraday standpoint, the way I trade mostly, I'd be taking something off here. I'd be taking off half of the trade, maybe even 3/4 of the trade, and then bring my stops to break even. I don't think there's any reason for us to take a loss on this trade if it doubles back against us. At the same respect, we're at resistance, so I put something in my pocket always. So that's just the way I would play it. Objectively, if you're taking more of a swing approach, Stephen, those levels sound good. You'd be looking for this topside break to basically stretch into 105.55. So does that make sense? Give you a little bit of a perspective there from both sides. He says it's more of a swing trade. Okay. Yeah, that makes sense. I mean, you want to have that stop right against the weekly opening range low. And if we break 104.85, 104.86, absolutely. 105.55, 105.80 would be levels I'd be looking for possible near-term targets. I guess at this point in time, slope doesn't come in until just even higher of that, 106.13 or so. Makes sense, Steve says, but I understand your point on taking something off and moving a stop. Cheers, Steven. Yeah, I mean, I probably take more break-even stops than the average trader, but that's typically because I'm higher leveraged, and that's typically because I play it much tighter. So I got no problem taking a break-even stop if I still like the trade and it moves down lower. So be it. I'll get back right back in again, no problem. But once the market has moved a quarter of the daily ATR in my favor, rarely am I going to take a loss on that trade. It's just the way I kind of keep my risk management a little tighter. All right, so we got through the commodities. We went through pound. 10, 11, 12, that was 13. FYI, your euro yen just bounced off 114.45. Euro yen. Huh. So see this, yeah, it's getting a little tired. It's getting a little tired, my friends. Yep. Look for this rebound here. Probably pop a short right up against that high into the U.S. Open. Wait for the 930 print. But a stop against that high if we do get another sort of signal here. I kind of want to see momentum. And this is just playing it real tight, but I want to see momentum hold that trigger as resistance on the way up. And it looks pretty good, guys. I'd be looking for a short here, just near term. If we get back below 1445, would really confirm a reversal. Now, in such a scenario, the first thing I do is just quick tack of retracement, because you're already looking for a near-term play. A basic 236 comes in just below those swing highs. So I would put my target somewhere like here. Just as an initial target, because you don't know that that's going to be a predominant high, right? This thing could come right back in, find a 236, then launch right through. So I don't want to make any key assumptions just yet. But certainly, as in what price action is doing on the near term, does suggest we might see some exhaustion on this stretch. Make sense? All right. I think I got everyone's questions here. If I missed your question, please don't take it personal and throw it back on the message board. I'll be more than happy. Dollar CAD, Henry. There it is. Here's dollar CAD, man. So with the loonie, I would be watching what's happening in crude prices. We talked about early in the session, just tapping near-term support. Dollar CAD looks like this. And as far as dollar CAD is concerned, look, you're at a resistance. You've been pressing it for so long. Typically, the more time it spends at resistance, the more of a sort of risk you have of kind of plowing right through. But I'm sick and tired of getting stopped out of this thing, to be quite honest with you. I've tried to call a peak on this multiple times. Some of them panned out. We took break-even stops. Some of them we just straight up ate the stop. So I'm not really going to mess with this thing until I finally see some more really conviction indications that we're seeing a turnover. You're getting a reversal day today off the highs, which is great, but I've just been stung a couple times over the last couple of weeks on this stretch. I really didn't think we were going to go make a singular stretch to this degree without any type of near-term corrective price action. It's crazy. So even on a 4-hour chart, the levels are kind of jacked up here. Bear with me one sec. Clean this up for you. Near-term support. Yeah, Henry, let me know what you're looking to do with this. Again, it looks like it's seeing some exhaustion here near the highs. It's not kind of the exhaustion I would have. When you're looking for exhaustion, by the way, you're looking for something like this: a quick spike and price action struggles as it collapses lower. When it kind of just peaks like this, not really so much of an exhaustion trade, but more so just of a rounded top type of trade, those are a little bit harder to call. And I think that's kind of what you're doing right now. It still risks to drop back into 133, but it's an opening range. It's all it is. Here's your weekly open. Here's your weekly opening range low. Here's your weekly opening range high. Play the range. If it breaks the downside, then I'll be more comfortable targeting 132 in the median line. But until it does, I kind of don't know what to do with this. He says, okay, thanks. I was looking for a short, maybe not. Yeah, so was I the last couple of days, and it hasn't really worked out. So I think it's better to be a little prudent on this one, Henry. Look, if crude, does hold support and you see a little bit of rebound, that would give us a little bit more support for this kind of trade on a pullback. But even crude, it's just sitting there at support. You're not really getting that strong reaction in price. So I'd be wary, but just know the opening range is there. All right. Guys, any other questions? Hey, Henry, you're more than welcome, man. Cheers. Hi, do you have time to come back to the Aussie dollar current price action, please? I'll give you a quick peek, but that was the opening bell, so I do need to run. All right. Let's see if we can't get that drop. No change for what we said earlier in the session. Yeah, it still looks like it could drift a little bit lower. Still looks like it can just drift a little lower. See if you can get that stab down into 75.94. I'd be looking for a reaction here in this range. Remember, your weekly opens at 76. The 618 is at 75.94. So give yourself a 6-pip, 10-pip range here. See if we can't get some near-term price action to be a little bit more constructive off that level. All right. Nick, you're more than welcome, guys. Everyone, best of luck trading tomorrow. Remember, those GDP figures are at 8:30 Eastern here in the United States. Have a great weekend. Monday morning, remember, we're free on the daily effects side at 8:30 Eastern, and then Tuesday, Wednesday, and Thursday right back here on SB Trade Desk. Have a great session, guys, and a great weekend. I'll see you next week. Cheers.